Is a Bitcoin crash on the horizon? Is Bitcoin on the verge of a major drop? The significance of seeing the big picture. What do you do when you're watching a scary movie and the monster jumps out from behind the door? You've probably jumped out of your seat. The reason for this is straightforward: you weren't expecting it. But what happens when you've seen the movie 20 times and the monster appears? There is nothing. You were forewarned of what was to come. Expectations were met with reality. This dynamic is replicated in the investment markets, pointing to an intriguing takeaway. The actual event that occurs in the market, whether good or bad, is not what drives price action. Instead, the difference between what happened and what was expected to happen is the true motivator. When you know what's going to happen, you can prepare and avoid a major reaction. In investing, a major reaction is typically a fear-based, knee-jerk sell order. That often leads to regret a few weeks or months later. Let us try our hardest today to save you from regret. This will be accomplished by naming a very real monster that lurks somewhere up the road, probably not too far away. It'll appear from behind the closed door. It will be terrifying. You're going to have a major reaction unless you're prepared. I'm referring to a Bitcoin crash. Now is the time to prepare so that when this happens, you can make a calm, logical decision that is right for you and your investment time frame, whether that is to hold or take some profits. Of course, what happens after this monster attack is equally important, and I suspect crypto investors will enjoy it far more. But you won't get there unless you deal with a surprise attack calmly and responsibly. Let's take a look at what that entails today. An objective look at Bitcoin in the aftermath of its recent 15% plus drop. Bitcoin experienced a flash crash last weekend, according to the press. From top to bottom, it has dropped around 16%. As of this recording, it is still down around 14% over the last 5 days. This is not the monster I'm referring to. I'm talking about a full-fledged Bitcoin crash of 50% or more. Possibly a lot more. Scott Minerd, CIO of Guggenheim Partners and a Bitcoin bull, warned about such an event yesterday. Given the massive move we've seen in Bitcoin in the short run, things are very frothy, and I believe we'll need a major correction in Bitcoin. I believe Bitcoin could fall to $20,000 to $30,000, representing a 50% drop. Is it frightening? Yes, indeed. Is this par for the course? Without a doubt. Let's take a quick stroll down memory lane. Bitcoin fell by 93% between June and November of 2011. It plummeted by 57% in August of 2012. In April of 2013, the figure was 87% lower. It fell by 85% between December 2013 and January 2015. It fell by 84% between December 2017 and December 2018. It dropped 52% from February to March of last year. Despite this, early investors have profited by thousands of percent. Yes, Bitcoin and the crypto world are becoming more mainstream. And as this trend continues, Bitcoin's volatility will decrease over time. However, we are not yet at a point where a 50% plus crash is not very likely. Formal paraphrase indeed, we are at a crossroads where a crash could be even more severe than in the recent past, precisely because so many retail investors now own Bitcoin, and the vast majority of them are unprepared for losses. I'm talking about investors who have weak hands as opposed to strong hands. In the investment world, weak hands are traders or investors who lack confidence in their strategies. They are essentially Me Too investors. As a result, when bad news or headwinds arrive, they sell. Investors who fully comprehend why they are investing. Who can see the big picture. Who can tell the difference between a temporary speed bump and a real, significant problem. These investors either ignore temporary price weakness or take advantage of it to increase the size of their position, assuming the big picture is still bullish. They have powerful grips. It's difficult to say how many investors own Bitcoin today, but according to ByteInfo and Glassnode data, the number of people engaging in daily Bitcoin transactions increased from 700K in January 2020 to around 1 million per day by last November. This figure is likely to have risen in the intervening months. How many of these people have witnessed a massive Bitcoin crash? How quickly will they sell if they enter crypto purely to capitalize on a major uptrend without a long-term belief in the sector? The more these inexperienced investors sell during a crash, the greater the downward pressure on market prices, sucking in other inexperienced investors who sell, exacerbating the crash. It's a never-ending downward spiral. It's time to get ready for this. After all, what goes up quickly can also come down quickly. To that end, Bitcoin has increased 681% since January 1, 2020. Shouldn't we be expecting a major reset from here? Be ready for the why, as well as the what? It's one thing to plan for the dollar value impact of a crypto crash on your account, that's the what, meaning what the crash size is. Another thing to prepare for is the why, that is, the reasons the media will point to as the cause of the crash. To be honest, the answer to the question why could be even scarier. Because you won't know how far prices will fall in real time. So, based on the why, Your imagination may run wild, projecting a total Bitcoin wipeout that may jolt you into a panic sell. The more frightening the why, the more vulnerable you may be to a fear-based action. One of the most serious concerns today is that the government will make cryptocurrency illegal. Indeed, many in the media attempted to blame the recent flash crash on news that Turkey's central bank had prohibited the use of cryptocurrency. This follows news earlier this year that India will propose a law outlawing cryptocurrencies, fining anyone who trades or holds such digital assets in the country. Following the India news, I reached out to our crypto specialist, Matt McCall, for his thoughts. His response was as follows. It is, in my opinion, a long-term non-event. If they are successful, it only increases the value of the limited supply. Remember that in 2017, China prohibited initial coin offerings, ICOs, and shut down local cryptocurrency exchanges. However, this stance has softened in recent years. According to CNBC, China's central bank now refers to Bitcoin as an investment alternative, signaling a significant shift in Beijing's tone following a crackdown on cryptocurrency issuance and trading nearly 4 years ago. Insiders in the industry called the comments progressive, and they are keeping a close eye on any regulatory changes made by the People's Bank of China, PBOC. We consider Bitcoin and stablecoin to be crypto assets. These are investment options, Li Bo, deputy governor of the PBOC, said on Sunday at the Boao Forum for Asia during a panel hosted by CNBC. They are not currency in and of themselves. As a result, the primary role we see for crypto assets in the future is as an investment alternative. Now, we should expect some sort of regulation in the near future, which is actually a good thing. It will be yet another sign of acceptance and adoption, paving the way for more capital to flow into the sector. What lies on the other side of a Bitcoin crash? Because a car accident isn't the end of the story. Let us return to Scott Minerd, who believes we are on the verge of a 50% crash. According to CNBC, I believe we could pull back to $20,000 to $30,000 on Bitcoin, which would be a 50% drop, but the interesting thing about Bitcoin is that we've seen these kinds of drops before, Minerd said. However, he believes it is part of a normal evolution in what is a longer-term bull market, with Bitcoin prices eventually reaching $400,000 to $600,000 per unit. In the short term, billionaire Bitcoin bull Mike Novogratz believes Bitcoin will reach $100,000 by the end of this year. Whether or not that occurs, his long-term analysis is critical for investors to consider. According to Novogratz, right now, total crypto wealth is around $2 trillion, which is roughly 0.5% of total wealth. If you don't believe that in the next 2 to 3 years, it could be 2% to 3%, you're not paying attention to the trends. The amount of growth that we will see in our industry is mind-boggling. We are only getting started. He went on to say about Coinbase's debut last week. Let us not lose sight of the big picture. This is a Netscape moment for the cryptocurrency economy. Remember, Netscape in 1995, 4 years before this insane frenzy, essentially signaling the beginning of the internet age. However, returning to the present, could we be embarking on such a major corrective action? Bitcoin has broken through its 50-day moving average as I record this on Thursday morning. Over the last year, the 50-day has been a critical level of support. The lower Bitcoin's price falls and remains below this average, the more likely it will turn into a major pullback. That isn't to say it won't happen, rather, the chances are increasing. Of course, no one knows, Bitcoin could be worth $70,000 by next week. But if a major crash occurs tomorrow, next month, or next year, see it for what it is, the cost of being a part of a revolutionary yet volatile asset class that will create a new generation of millionaires in the coming years. Also, don't misinterpret a crash for what it isn't, the end of this asset class.